he was way off base, and I don't mind calling, bullshit is bullshit.
That's what people got to get on board with, not these scare tactic talking points. So, all right, welcome to Talking Investing. I am Tom. Today we have two special guests. So we're very lucky to have management from HIVE Blockchain with us. Frank and Aydin are here, and I'm just going to flip it to them for a second so they can kind of introduce themselves, and then we'll get into it.
I'm Frank Holmes. I'm the executive chairman, and I was the co-founder on the launching of HIVE Blockchain, the first crypto mining company in the world, and the only one mining both Ethereum and Bitcoin on an industrial scale. And predominantly, in the Northern Hemisphere, using and sourcing green energy from Sweden, Iceland, and Canada. And Aydin is our president and chief operating officer. He has a black belt in engineering and crypto, and has become a travel guy. He's just recently in Paris, expanding his brain with a bunch of CEOs and going back to like being in college, then up to see our facilities in Bowdoin, and then over to see our facilities in New Brunswick with institutional investors. So he's just become a real road warrior. And when you want to, Tom, get into the granular little numbers, etc., Aydin's the guy. I'm a fund manager. I'm a macro type of perspective on this.
Well, both are necessary, so that's
yes, sir.
That's good. I want to start off, if it's okay. You mentioned you guys mine Ethereum, and you're basically, as far as I can tell, you guys are kind of the leader in Ethereum mining of the publicly traded companies. I know a couple other companies are dabbling, but it seems like you guys are leading. Is that something, on the conference call? I listened to your conference call, and you guys did a great job. Thanks. You talked about sticking with Ethereum, and you talked about proof of work versus proof of stake, and in your deck there's some slides on that. So can you just tell the viewers what your thoughts are on that?
Well, there's a big debate, and there's been a big push by the Ethereum ecosystem, which is actually bigger in numbers because of all the coders of creating all the apps for Ethereum around the world. And so they want to go to this proof of stake, not from proof of work. And I've listened to the story since day one of the launching of HIVE, when Ethereum was a couple of $100, went to 2,000, fell to 80, went right back up and soared to 4,000. Now it's corrected off that level. I don't think it's going to happen the way they would like this, because there's a big risk. And the risk is this: the SEC wants to go after proof of stake, as that's why they're going after Ripple. It's centralized. They can create coins and money out of thin air, and therefore they're creating like a security. Whereas Bitcoin or an Ethereum coin, that you buy a GPU chip or an ASIC chip for for mining Bitcoin, and you buy electricity and you validate so that it becomes a digital asset. It has an economic value. That's why there's a futures market behind both Ethereum and Bitcoin. If you go to proof of stake and you centralize, you go from decentralized to centralized, you run a great risk of the SEC coming in and wiping out that ecosystem or other regulators around the world. So I think they're going to coexist. And my thesis so far has been dead on. Last year, we hodled 25,000 Ethereum coins, and Bitcoin was up 80%, and our hodl was up 300%. Nice. So and we've traded Ethereum, and right now we've been involved always trading it to buy more equipment, to upgrade our facilities. And we have the highest revenue of all of our peers so far. And if you convert, I didn't give you more detail, converting to Bitcoin. We've had Hut 8 come along and copy the model, but they're just mining Ethereum to convert to Bitcoin because it's less expensive. So we think that Ethereum is going to be a significant tool. And here's the big special reason why. There's tens of millions of kids around the world gaming.
Right.
And if they're not gaming and they're now more mature, they're computer designers, they're architects, and they all need GPU chips. And so many of them work all day. and then they turn on their machines, they go to bed, and they're mining Ethereum. So if they can get one or two extra coins a year, all of a sudden they have extra cash flow. As a kid, I'm the old guy here. I had a paper route. Right?
Well, me
Today,
too.
they turn around and digital mine, and when they're going to bed to get extra cash flow. So I think that if you collapse that, it would really have a negative impact on the ecosystem. So I have a thesis that will not happen. But I think I like to turn to Aydin and to explain to you that when you do the translation, the conversion of Bitcoin Ethereum as one unit, we are the most efficient crypto miner on the planet, and we have the highest returns on invested capital.
Yeah, thanks, Frank, for that overview. I think, whether it's people who have a casual interest in positioning themselves in crypto, or they're looking for a more, nuanced insight into how they could have exposure, Hive just has the bases covered, right? We've got a phenomenal team, and every time I come back from one of my trips, visiting our facilities, I actually come back very energized, and I do because of our team. We've got a great team of coders, data center technicians, and we literally function 24/7 as a company with operations in Europe and North America, and we've got phenomenal uptime, and there's a reason why we are top of class in our peers. And this is now I'm just talking broadly in terms of running the business at large, because if you look at the monthly production reports, which have now started coming out on a regular basis for all the different crypto miners, you're starting to notice that people are having trouble scaling. And what I mean by this is, you've got companies that are saying they're running 2 exahash or 3 exahash. But the very curious trend that's emerging is that on a pro rata basis, they're not all making the same amount of Bitcoin than they should per exahash, right? And so, really, this trend started in self-reporting around December. All the big players, all the big NASDAQ players said, okay, we're going to come out month by month. Because of course you got the quarterly fiscal reporting, and that's great. But, crypto never sleeps. It's 24/7. And so having monthly reporting helps the market understand where the players are. And so one metric, and there's really smart bloggers out there that track this stuff. Blondity is one of them. They actually track the Bitcoin per exahash that you generate, and we're top of class, right? And so that's really a function of our great uptime. And even when we were in New Brunswick, I had a bunch of analysts from the investment bank joining me, and we had our high voltage electricians there doing transformer maintenance. I mean, these are infrastructure projects. Like our New Brunswick flagship facility, it's 1.1 exahash. It's several acres over 3 buildings, right? There's about 14,000 ASICs operating. So, it's a massive undertaking. That's for 1.1 exahash. So that underscores the importance of the statement, what is scale without efficiency? If you're planning to scale to 10 exahash and you're only producing 80% of the coins that you're supposed to be producing, you've got more immediate issues to solve for. But the market has been romanced by these grandiose claims of future hash rate capacity, and so that's why when you look at the monthly report, we've had our December, January, and February. We were top of class when it comes to Bitcoin per exahash. That's one thing, and then the other thing, when you break it down more specifically to Ethereum mining, it's incredibly high margins right now. The fleet of Ethereum cards that we have operating generate profit upwards of 30 cents a kilowatt hour. In some cases, our data center grade cards. So we have new generation NVIDIA cards that we announced last year and have been installing.
So I'm going to interrupt. I apologize, but what he's saying is making 30 cents and our cost is 3 cents.
Exactly. Yeah. Yeah.
So if you've got 27 cents, it's a 90% margin.
That's the key right there. I appreciate what you guys just said, and I will tell you, as as an investor and as a YouTuber that's, very invested in this sector, I do the same thing that you're talking about. And, you guys obviously have more inside information than I do, but I just do a straight up calculation. What does everybody say their exahash is? And I think, and there's 3 or 4 that don't report, but you're right. This monthly reporting thing, I really appreciate it. So I want to thank you guys. And, there's almost no other sector or industry you can invest in where you get just such tangible, monthly updates to be able to, those who are participating in that are very transparent. And my calculation, I just do the simple calculation. Here's how much hash rate and with you guys, it's Bitcoin exahash equivalent, and you do that for us. Thank you, because that would be very difficult for us to do. Divided by the number that you are producing, and you guys you usually come out number 1. So I know in the February numbers, you guys were the most efficient miner. So you kind of beat me to the punch. So, I'm sorry, go ahead.
And the other thing you're not going to see is a picture behind us of solar panels, and we don't even really have solar energy. So I'm getting a little frustrated and annoyed seeing these other crypto people with solar panels, and they're green. They're not green. They have mostly carbon. They go and have 10% solar panels, and they're not that. And then they're actually coal, and they have to go buy carbon credits. They have to. We don't. And so we've tried to really stay focused on what are the highest returns on investor capital. And Aydin's just doing a great job. He's the kingmaker here of navigating with the rest of the team, the Intel transaction, and getting the OEM in China and getting the contract here. He pulled all that together with Gabe, our counsel. So I think that I'm so proud that I have a bunch of like Navy SEAL soldiers here that all of a sudden take a task on and they go stealth and they get it all done. We were the first to announce with Intel because Aydin wanted to have a great contract. He wanted to make sure that everything was, all the nuts and bolts were actually tight on who was going to be the manufacturer, and they start delivering in the summer. So when we come out with it, we were the first, and they wanted to be with green only companies. So that was a big part of Intel.
Oh, that's a part of what Intel's doing. They want to stick to green. Okay. Well, I know that fits the bill with you guys. That's an interesting thing. It's one of the things I wanted to talk about. You guys are obviously a leader on this Intel chip, but this is a little different than everything else. Typically, I think, basically, most of the rest of miners are just bought as a unit with the chips in them. And this is something where you guys have had to hire an OEM, and you're gonna basically have machines custom made and put the chips in them. Is that the concept?
Yep.
Yeah, so it's not just any OEM. We've actually strategically partnered with an OEM that has years of experience working with Intel. And so we've got a first mover advantage. And I sort of straddle the line of what I could say publicly, just because we've actually got a supply agreement with Intel. This isn't just a one-page purchase order. We've got, and moreover to Frank's point, we've got a comprehensive supply agreement directly with Intel Corporation, and so this is going to be our allocation for the year to come, and that's going to really propel us for into two realms. One is next generation ASICs that outperform anything that's on the market right now in terms of efficiency. Number one. Number two, great hash rate economics, because at the end of the day, we're a business looking to build shareholder value, and we're not just about splashy headlines. We're not just about greenwashing. That's the reason why Hive was selected by Intel, mind you. They reached out to a few players in the industry. They shortlisted us, they interviewed us, and then they decided who they were going to grow with, and we were one of them. And being green and clean is a big part of that equation, because further to Frank's point, we're not putting up pictures of solar panels pretending that we're doing solar like some other companies are, no names. And so the thing is like, the real players in the industry, they could tell, like since day one, I first public crypto miner, the original ESG conscious crypto miner, all green and clean energy, hydro, and a little bit of geothermal in Iceland. But the The Intel deal is very exciting. We're expecting to have, well, I suppose we'll have a lot more juicy details to share in short order, but we just had a great call last night, and yeah, we're looking forward to having the first. I want to say so much, but I'll just.
You gotta wait for it.
I'll give you another thing is we're doing some math. We're doing a presentation tomorrow for Canaccord and for institutional. And so what's our PE ratio? 5.
Mhm.
5. What's Riot? 65.
Right.
5. I can give you HUT 8. It is 3 times, you're paying 3 times for that PE ratio. And you know, why all of a sudden this sort of discount on a relative basis? And a big part is, for the IC, is a lot of the crypto ecosystem do not like the Ethereum. The Bitcoin hornets do not like it because they have this concept of proof of stake over proof of work. And so Bitcoin is the ultimate digital asset. And Michael Saylor's done a wonderful job articulating that story. But we're also banking and rapidly growing our hodl in Bitcoin.
Right.
And at the same time, we have the least amount of shares dilution. If you look at the number of shares in 18 months by Riot is up 500%. Marathon is up 12 times.
Yeah,
12
I know
times.
those two. There was just a year full of
and
dilution after dilution.
Bit farms, you know, there's been much more dilution. So when you do this, what's called return on invested capital model, we came out number 1, and I'm very proud of that. As Aydin just said about creating shareholder value, and I think the market's going to all of a sudden discover, you know, this expansion into Texas is for exahash. Well, we produce today with today's difficulty almost 9 Bitcoins a day. So we produce almost 9 Bitcoins a day. And we're going to go from almost 2 exahash.
And that's
Bitcoins a day.
I'm sorry to interrupt. That's your straight Bitcoin, or is that your total BT
Only
equivalent?
Bitcoin.
That's your
Only
Bitcoin.
Bitcoin.
Wow.
Just Bitcoin.
Okay.
And we have a run rate of 200 million, and it's costing us $36 million to run the business. That's just a very efficient business. So, and we have $150 million in liquid assets on our balance sheet. And so with that, if you take a look at each quarter, even as the Bitcoin difficulty rose, the expansion that Aydin has done a great job in getting the construction done in New Brunswick, et cetera, our Bitcoin production has been rising faster than the hashing difficulty has gone up. And so what are we going to produce if the difficulty doesn't change a year from now? We'll probably be close to 28, 27 Bitcoin a day.
Wow.
That's what 100 megawatts in Texas would do with wind turbines, renewable energy again. So I think if you look at that number, okay, so if you're doing, let's see, for rounded numbers, 30 Bitcoins a day at 40,000, that's 1.2 million a day.
That's at 40,000, and we'll see where it goes from there.
At 50,000, it starts to scale. And then our Ethereum, we're upgrading all our machines. We're going back. We've been rising our Ethereum production again and getting more delivery of NVIDIA chips. So we're very excited about where we are in this benefit. And also to share with you, we have like 20 employees. So we do about 10 million revenue per employee. The only other company that's going to come close to that is going to be Marathon, but they have a much bigger market cap. So on a relative basis, we're much more efficient.
Right. Yeah, you guys, you talked about efficiency of mining, just getting the most out of your exahash, but you also have one of the best gross profit margins. And I'm just wondering, is that really the Ethereum piece of that kicking in? Is that how you guys are able to have such an incredible gross profit margin?
Look why HUT 8 jumped into getting Ethereum chips from NVIDIA only. and then they immediately convert it. Their cost of mining, 15% of their production is coming from actually Ethereum now. And it's their cost for mining a Bitcoin using these machines and converting is 2,800.
Yeah,
but ours is 1,800.
And
wow.
If we did that conversion, but we made more money trading and hodling Ethereum. So we sell when the big surge goes up, then we remine our position, then we sell, then we remine.
Well, that's one of my questions was, and I think you're kind of answering it, is, you know, a lot of the miners are just hodling 100% of everything, and at some point, you know, debt and equity raises only go so far. So you guys, it sounds like you guys are using your Ethereum for, you know, operational cash flow. Is that a fair statement?
And trading.
Oh, okay. All right, yeah.
So if you look at the DNA of volatility, and we put this in all our presentations, the market 70% of the time is up or down 1%. Gold is up or down 1% on one day. Over 10 days, market goes up or down 3%, the S&P 500.
Right.
Ethereum, 7% daily, and it's 36% over 10 days.
It's incredible.
So all of a sudden it's down 1 standard deviation over 10 days. You mine and you basically replenish your inventory. Boom, it takes off and you trade it out.
So you guys
by
are...
the way,
go ahead.
Just to add to Frank's point, sorry, our energy is quite frenetic. It's just an extension of, everything that we're doing at the company, which is, I mean, there's a reason why we kind of run around the clock, just because there's so much, physical and figurative energy. The data center cards, so they're doing actually about 60 cents a kilowatt hour. So so earlier in the call, I mentioned our first generation ETH cards are doing about 30 to 37 cents a kilowatt hour. The data center cards, like the new generation NVIDIA ones, are doing 60 cents. So when you've got 3-cent cost, there's your 95% profit margin or what have you, right? So that's kind of where we're getting these exceptionally low break even, and this is why we're so profitable. It's like, with Frank's years in the capital markets, understanding capital allocation, and merging that with engineering granularity, that's why we've been performing so well. And I think the most frustrating thing is, when is the market going to really sort of grasp that? And look, we're a great investment at the current time, but we've been trying to really package it for people. So because we know we're mining Bitcoin and Ethereum, and we know that adds an extra step of consideration for the investing public to kind of take stock of, but it all shows up in the financials. What can I say?
Well, that's exactly right. And it's one of the reasons I'm so glad both of you guys are on to articulate this, because education, I think, is key. It mystifies me, not just Hive, your whole, you guys in particular more so, but your whole industry and peers, in my opinion, seem to be very, and I know you guys can't talk about this stuff, but I'll just give you my opinion, it seems to be very undervalued. It seems like for whatever reason, the money just hasn't rotated there yet. So I don't know. I hear you guys are going to kind of be out and about this year trying to educate and teach people what's going on here, because it just doesn't make sense. You don't see gross profit margins like that.
No, you don't. And but also want to share with you that we didn't get to hear about Aydin. Aydin is lots of capital market experience from taking a little micro cap public in the crypto mining industry. The timing was really gave him a black belt in adversity with Bitcoin. He came out public in the winter. I got at least the first run, then I got the winter. So Aydin has that, but he's also an electrical engineer, which helps tremendously in our vision to build out. And Aydin, could you tell about yourself a bit, and then the team, Luke and Bill?
So going back, I was actually inspired by Hive and Frank in the summer of 2017 when they were the first crypto miner to go public. And so I saw an opportunity to enter the space. I founded and took public a company of my own, raised 20 million bucks of institutional capital. And by the time we started trading, Bitcoin had fallen from 20,000 to 6,000 late summer 2018. And so I was baptized in a crypto bear market. And so, but moreover, Hive and Frank and myself, we've been through 2 crypto winters, right? So we're it's not like a flash in the pan. Hey, you know, Bitcoin's rallying to 30, 40 grand for the first time. Let's do a SPAC deal. Let's just get the name out there onto Wall Street. And I think that there's been a lot of people who capitalized on market hubris in the past, 14 months. But there's sort of what you may call the first generation crypto miners that know what it's like when those margins thin out. That's why we denominate things in cents per kilowatt hour, which might not sound intuitive at first, but that's actually the best way that you look at it. We're in the hash rate commodity business, right? We consume energy and we produce hash rate. That's our input and that's our output, right? And so when you can kind of systematize the business that you're in and understand it's like a physics equation, then you can start to optimize that physics equation, right? And then this is where you have guys like Bill Gray, our CTO, who's been coding since he's 9 years old, and Luke Rossi, who he's we'll be on a Zoom call. We'll be like deep into like an Excel orchestra, and like Luke will notice like 1 decimal place, and he'll just come out and so. Just like the sheer intellectual capital, and we and Frank actually acquired that team when we did the GPU1 deal earlier in 2021. Gabriel Igby, our general counsel, and so whether it's law, engineering, computer science, here mathematics, we've got a stellar team in Sweden as well, and a large contingent of programmers from Croatia as well. We've got a really phenomenal team. And it's actually the intellectual capital that's sort of like our core engine, right? Like that's our like Ferrari engine on the inside, and so that's every morning we have huddles, right? And Frank is there, the whole team is there. We're all super synced up, right? And so this is a lot of the magic happened is teamwork, right? And Frank inspires us to, we try to keep up with them. Let me just put it that way.
But we start, what Aydin is sharing, Tom, is that every morning, 7 o'clock Vancouver time, at 9 o'clock Texas time, 10 o'clock Montreal time, 4 o'clock Swedish time.
Ouch.
Everyone comes on, and the drum roll is, what's our production of Ethereum? How much did we make? What was our hashing power? Okay, now North America, what was our hashing power? Where are there glitches in machines? Where can we swap out? Okay, let's see if we can sell those older machines and bring in a new one. Let's improve this. Get in a truck and drive for 6 hours from one facility to another. This is our life. But we started off every morning focused on our hashing power. And get those machines plugged in. It's high fives for everyone. Everyone gets a bonus when we hit another exahash. There is a cash bonus for the whole company, for the employees, every time we hit that bogey. And it creates that great morale. Then Aydin turns around, he's got all these technical meetings he's talking about with guys with project management skill set. Oracle, I think, was one of them. Telecom industry, network experts. The team we have in Sweden, I met a bunch of these guys last summer. They were with special forces in America going into Afghanistan. They set up the network for the Delta Force. There were ex-military network specialists that are from Croatia that live and go back and forth into Sweden. They run our facilities. I mean, we have top-notch team. And I'm just thrilled that I have Aydin on now, because he can manage all that granularity, because he likes to get that calculator out and talk about joules per second. Joules. And I always think I have to buy another diamond for my wife, but he's talking about joules.
And you guys are scaling up. I mean, you grew quite a bit in 2021, and based on what you've put out in press releases, you've got quite a bit that you're going to grow in 2022. So
we double again, methodically, rationally, we double again.
Yeah,
right.
we increased our Ethereum footprint in 20% in the last few months, and it was all perfectly synced. We had a 10 megawatt expansion at our Sweden facility, and all these NVIDIA cards arrive, and we're at 5.6 terahash today. And in November, we were at 4.5. So, from 4.5 to 5.6, actually, it's more, it's about, 24% of an increase. And it's everything is synced up, right? Like we scale with efficiency. That's the key, right? We scale with efficiency. And further to Frank's point, if we see an opportunity to optimize, like we look at things down to the very PD, like people like to talk about megawatts because it's casual, but if we're having a very thoughtful conversation now, you have to think down to the kilowatt scale. Like how many machines can you plug in on that rack? Like what's the best use of power? How are you going to get the most petahash per megawatt in your facility? And exactly, we will put a few hundred machines on a truck and send them from New Brunswick to Quebec if that serves our optimizations the best. And it's just constant symphony of intellectual capital, being applied to generate.
So we bought some new machines last year. We got all our money back plus, and we could sell them for the same price we bought them. And now we can actually bring in higher performing machinery for that efficiency. Okay, Iggy, sell these ones. As soon as the other ones are installed, blow them out, and let's keep high proficiency. So it's working out so far extremely well for running the business. And a lot of guys were, we also had the curtailments in Quebec like other people, and the
Right.
issues in energy. They had them in Texas, and they had them. We still delivered the best numbers. We still delivered, and that was something I was sort of worried about, and so was Aydin. Quebec started going down for 100 hours, and then prices went up, cost of energy in New Brunswick. What's that going to look like? And because we're so focused on that efficiency every morning call, it showed up. I was thrilled. You don't realize it. You're so busy grinding and running, you put your head up and you go, holy, they're behind me now. That's what the team does.
Well, it sounds like you guys are a lot more hands-on than probably most people think. So that's
we live this. I mean, Hive is live.
Well, as an investor, that's obviously what we all want to hear. One of the big debates I get in, and you guys just talked about it, and I don't know why it's a debate because it's really just a mathematical fact. Everybody argues, well, what's the real cost per Bitcoin? If there's a crypto winner, which, by the way, I don't think we're going to have any more crypto winners, but that's just my personal opinion inserted in there. Bear markets, bull markets, but anyway, there seems to be a vast disagreement on the cost, and you guys basically just laid out what your cost is per Bitcoin. And, we've got people out there saying, it cost them $40,000 a Bitcoin, and, everybody's going to go out of business at XYZ. I mean, how do we is that a part of, do you guys run into the same thing?
I think part of it is giving the public the proper tools to be able to understand these sort of calculations, because my fear is that that maybe there's like a network effect where it's like the person with the loudest voice might say something that's inaccurate. Like I think lately I heard there was one pundit who suggested we bought renewable energy credits, which is like a complete joke and completely untrue. And people that don't know how to calculate break-even costs properly, I almost want to just publish something like a tool for the public, and not necessarily for it to be a biased tool that's just like, hey, this is how great Hive is, but just like an objective tool whereby they can just plug in what is the true break-even cost right now based on your dollar per kilowatt hour, because it all shakes out. It's all just math, right? But when we're like if we're paying 2-3 cents for power and we're doing 65 cents a kilowatt hour, on our A5000 NVIDIAs.
It's not complicated.
It's not complicated, right?
There's a lot of people, I get in your industry, you guys suffer from a lot of, FUD, fear, uncertainty, and doubt. And I think there's people that just put that out there. I'm gonna just, you guys don't have to mention his name, but I'm gonna say it. I've done several now videos on, Kevin O'Leary came out and said some stuff that just really didn't make any sense to me at all. I was mystified at what he was talking about. And I just want to give you guys a chance to respond, because he called a lot of people out by name, including you, which you let me know. I don't think what he said is correct. Can you just give me a little bit about your green?
He must have been on some of those mushrooms that he's also promoting, or something, other drugs. That's all I can share with you, because I don't believe he owned Hive. I just don't believe he bought it and sold it. And I think I really, didn't give him much credit until all of a sudden he pulls Hive into this green ESG. We defined it. We're the first to have an ESG strategy. What we're doing now in Lachute in Quebec, taking a 40,000 square foot building, mining Bitcoin, and then we heat 200,000 square foot building. How we recycle our energy, and it's all electrical, it's hydro, or it's geothermal, like in Iceland. So to make those statements now, Marathon and other people, they're all, they have to buy these carbon tax credits in HUT 8 because of what their position is. But we're not in that position, and for him to do that, he was way off base. And I don't mind calling, bullshit's bullshit. You should, be careful if you go and mention that, because that is Hive in that position. That Hive mines Bitcoin, Ethereum. You can say that, and people, right. The crypto hornets only like Bitcoin. You say that, but to say that we have to buy tax credits, I think that's just so left field.
Yeah, I think that Kevin wants a seat at the big boy table, but he's going about it all wrong. And, it seemed like he first indicated his interest. He was actually hosting a panel that Frank was on in Miami at Bitcoin Miami last year. And Frank, I think it was also maybe Marathon and Riot were on that panel. So there was some big public crypto miners, and Kevin was talking about, $1 trillion of capital, institutional capital in the U.S. that has an ESG mandate. And Frank was there on stage being like, right, like our green and clean coins that we've been mining since day one. So, Kevin's a fan, right? And, not 1 year later, that was June. This is March. All of a sudden he's changing his tune. So I can't help but think that he's obviously going to be, coming out with some kind of deal or some kind of play on his own. But here's the thing. He is not a computer scientist. He's not an electrical engineer. Shit, he's not even an energy lawyer, right? And the thing is has he run a public company? I don't think so. I think
he did. No, he did. He sold it. He did. He did the learning company, and he sold that to the big toy company. That's they had to write it all off.
Exactly. Yeah, I didn't know it was public. I know that he did a deal that was a massive write down. And so the thing is that there's a lot of noise in the space. And so if he wants to enter the ecosystem, just being a source of noise, he's going to get drowned out, because this industry is about economies of efficiency, right? And not just economies of scale. And so I don't think that Kevin's really going to be able to compete with the guys that are actually doing this. They're actually building out industrial infrastructure that, we commission substations. We bring in 50 megawatt, 30 megawatt substations. We bring them live. We have, high voltage, technicians. We have, computer science. Just to come in and make these hand waving proclamations. I mean, I get it that he wants attention, but he's just going about it all wrong, right? So the thing is if he wants to be taken seriously by the crypto community, I think he has to have, I think he needs to actually take a step back and educate himself a little bit more on, hash rate economics and, and the energy tapestry in the U.S. and understand, how the different players operate, and before he starts kind of making those like, wild and just sort of like almost blind. I don't know if they're accusations, but it was it's not the right way to kind of earn anyone's respect. That's all I'm going to say. That's all I'm going to say.
Well, it just felt like phase one of some marketing plan that he has for himself, but I don't know what his intentions are, and I think a lot of very big companies that have spent a lot of money are finding out there's a learning curve in this industry. You just don't plug these things in and go to bed and make money. So, there's people sitting on tens of thousands of machines that they can't plug in yet because, they didn't line their X's and O's up. And that's what you guys talk about, getting up at 4 in the morning and have a meeting every day, make sure you're on the same page. You got to know what you're doing to start with. So, I think a lot of people are learning. And that leads me to another, you guys had mentioned it's like Bitcoin mining companies are just popping up out of, thin air, and with, we're going to be at, 15 exahash by December 31st, 2022. I'm looking at that going, well, everybody tried their hardest, last year, and I don't see anybody that did anything that even slightly resembles that. So is that just pie in the sky in your opinion, or is that?
Well, it's interesting because we were at a conference, I in Austin, Texas, last month. And it was interesting because Iris Energy, it was very sophisticated infrastructure players that built that company. They're mining in British Columbia. They're moving out, expanding in Texas. So their lead director was speaking, and he said right now all the crypto mining stocks are trading in unison with Bitcoin price. And it used to be by the day, now it's by the minute.
Right.
And there's no differentiation really between who has an ESG strategy that's green and clean, like they are, and like Hive is, versus Marathon. They all, or Riot, they all seem to go in that same motion. And I thought that, that was a very, interesting observation he made. And he had some other things that this differentiation is not there yet. And this whole thing on the ESG, we haven't seen it click in, but that doesn't mean we're going to lose our standards of care or our efficiency to say, okay, we'll go into coal because it's cheaper. No, we're just not going to go down that path. And it makes it more difficult to find actual renewable energy that's reliable is difficult. But I do believe the ESG strategy is going to get redefined because the crazy EU climate change policymakers, it's amazing to see that they didn't have electrical engineers and engineers like Aydin come out and plan out the grid. They basically had political people come out and say, shut down all the nuclear reactors in Spain, shut them all down in Germany. Boom, up goes electricity prices for the consumer 400%. Then you have Russia invading Ukraine. Oh, another 6-fold increase in my energy costs. No planning, no thoughtfulness towards this sort of overall ecosystem. So for us, we know how hard it is to find stranded electricity, where a third of electricity basically is wasted or is inefficient. How do you go in to get it, especially if it's renewable? So what's going to happen in Europe? All of a sudden, natural gas is going to be okay to be ESG, and nuclear is going to be okay because the Spaniards and the Germans have to buy from the French because they kept all their nuclear reactors. So you've already seen it in the press in Europe about redefining what is nice to go into the ESG world.
Well, yeah, and they had that vote in Europe over there, I guess a couple of days ago, almost trying to scapegoat the miners as to, you just laid out what their energy problem is. It's certainly not proof of work. So
it certainly is not. It certainly is not. And we're thrilled, I just keep trying to tell people, I have spoken and participated in so many gold mining conferences around the world. I have financed the creation of the biggest gold royalty companies, be on the ground floor of them. And I've attended the big BMO conference. Nothing like crypto events. Before COVID, you go to a crypto event in Singapore, then you could hop over to New Delhi, then you go to Dubai, and then you could go to Germany, and you go to England, you go to Spain, you go to New Zealand, packed, big prices to get in. So right now, in 3 weeks in Southern Florida, is a big crypto event. It's 30,000 people attending. Today, the tickets are $2,100 a ticket. All right, that's 60 million in revenue.
That's
Who
incredible.
pays that? The conference that we did in Austin, and we said we'd like to sponsor the stage. Right? They want $100,000, Aydin.
Yeah, right.
But they get to charge that because people come out to want to have their name like that. We're like T-Rexes, we got short arms and it comes find the wallet. We don't like to spend the money that way. That's just us. We enjoy this presentation with you, Tom, because this is how we like to be able to share our vision with the public.
Yeah, and you guys have a unique business. It's, you don't have to per se sell, you're not selling your product. You have investors, and I think that's a smaller, easier group to educate, although it seems like they're running a little slow right now on catching up to what you guys are doing and what everybody's doing. But I know that you guys are getting the word out, and I will, I'm a small channel, but I talk a lot about all of the same things you're talking about, and I'm just trying to get people to understand, this is, the other thing with the ESG is, you guys are way out ahead on that, and you talked a little bit about that, and people aren't educated and they think that all Bitcoin mining is bad, and then they go, well, X percent of Bitcoin mining, they're taking up X percent of energy in the world. Well, like you said, a lot of that energy is wasted. And if all of your energy is green, that's what people got to get on board with, not these scare tactic talking points. So, I'm going to keep banging the drum, and I know you guys have a lot bigger voice than I do. So,
thank you, Tom, and thank you for the opportunity of us to share our vision, and I hope some of these other talking heads could be more positive and constructive that are out there, and giving us the opportunity to clarify. But I will just stay focused, and we believe we're in the cusp of a secular bull market, in this whole idea of blockchain, triple entry accounting. When you go to the big consensus conference, the biggest booths were IBM, were blockchain. It's to recognize that. And the same thing is happening now at this other conference that will be in full force with the whole team that'll be flying in from Europe. And we're going to make it so we'll have a board meeting there and the day before, and go and network and get the vibe for everything. But we're not going to be spending $100,000 for a booth and $100,000 for a space of the shareholders' money.
I'd rather have you get to 10 or 20 machines or whatever it is.
Yeah, so that's just us. And we'd rather make the time to speak to valuable people like yourself and your listeners. Thank you.
Well, thank you. Thank you both so much for coming on. Any parting thoughts?
Look up. Look up. See, up there. That's why prices are going.
All right. I agree. Thanks again. Thanks so much, both of you, for coming on. And I know my audience will really appreciate it, and I really appreciated the chance to get to talk to you guys.
Awesome.
Thank you. Wheels up.
Thanks, guys.
All right. Thanks.